Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you're new to the page, hit that like, subscribe, and notification bell in the bottom right-hand corner. If you're on your phone, sideways, I saw this from Josh, make sure you turn it vertical, all right? And then you'll see the like and subscribe under there. Hey, firstly, this is brought to you by Stock Up University. Make sure you check out the top link below, Stock Up U, and then still, you can get 16 free stocks. Make sure you download the Moo app, get the free stock. With just $100 deposit, you're going to get 5 free stock worth up to thousands per stock and a $50 instant cash reward. All right. I also want to tell you guys that tonight, I will be joined with Keen and Grace, Stock Mo, and Stocks with Josh. The Quad Squad, all right? You're going to come and join the Quad Squad tonight as we discuss this market. There will be a link in a box to your upper right-hand corner at the end of this. Just make sure you hit notification on that too and come and join us. Let's get right into it. Well, what's going on today? Why is the market tanking? Remember, only yesterday, I showed you guys the report that said that this was the worst trading generally since I'll pull it back up. But this is one of the worst trading months of the year. Okay. Followed by one of the best trading months of the year. So July is typically one of the best trading months of the year, followed by August, which is a cool down. And let me cut this down. I'm sorry, good people. I'm a little loud here. All right, there we go. And so followed by a cool down. And the cool down is this month. Well, what made it worse was this right here. This is what made it worse, good people. And they picked it right on the first, right? This is when we got downgraded as a country and the entire stock market is coming down because of it. Now, some will say the timing is horrible, but if you zoom out, actually the timing is perfect if you ask me. I'm not afraid of the timing because I said on yesterday that I was pulling back in my trading, and this comes, I would rather it come in the worst month rather than while the market was going up and you and I were making all of the money, that this would have came and snatched everything. At least we were a little bit prepared. Let's go back. Fitch downgrades U.S. credit rating from top score after debt ceiling crisis. Excuse me. Let's go right down to it. Let me blow this up a little bit. Okay. Fitch downgrades its credit rating for the U.S. government from AAA to AA 2 months after the debt ceiling crisis was resolved, right? Now, some may question that. That's what I question. Yes. Why so late? You know, but in Fitch's view, there has been a steady deterioration in standards of governance over the last 20 years, including the fiscal and debt matter, right? The rating agency said on Tuesday, Fitch said the U.S. appears to be suffering from an erosion of governance, right? Pointing to the Washington brinksmanship over the debt ceiling as an example. Let's keep reading because it says something very interesting in here. With a rating of AA, the U.S., look at this. I want you guys to look at this. Still holds amongst the highest possible ratings, okay? Which Fitch says the nation still benefits from large advantages, okay? Advances, should I say. All right. Now, I wanted you to see this portion still holds amongst the highest possible rating. And you guys know that Standard & Poor's also is a rating, all right? As a standard, should I say, credit rating, Standard & Poor's. Now, I would, does this hold a lot of weight? The question you ask, here's the answer. Yes, it does, right? The Dow was down 248 at the time of this. Let's add the S&P and the NASDAQ. And as you can see, look at that. The S&P is down 64 points. The NASDAQ is down 363 points. The NASDAQ is down 2.5%. It is crushing the NASDAQ. Look at that. So is this important? Here's your answer. Does it hold a lot of weight? Here's your answer. Now, the question is here's the question. Is Fitch, look at this, is Fitch downgrading us bigger than Standard & Poor's downgrading us? That's your homework, right? And so is today an overreaction? Is this a buying opportunity? Or is it more downgrading to come? Is it more downward motion to come? Now, on tonight's video, we're going to discuss that. We're going to get into that. And I don't want you to just get my perspective. I want you to get a perspective from 4 different people, 4 different influencers. So we're going to discuss that tonight. Make sure you click that box. We will be live. Okay. It's going to be 7 o'clock Eastern Standard Time. All right. For those of you in the Chicagoland area, that's 6 o'clock, right? Take away. And then for those of you in the California time zone, that's 4 o'clock, right? 4, 5, 6. So yeah, California, 4 o'clock, right? Chicago, 6 o'clock, New York, 7 o'clock. Follow? So we'll see you there tonight. Now, what else do we have? Let's go into something that I really want to discuss with you guys, because it's very, very important. And this is going to help you guys. And I'm going to show you where I may have messed up. All right. People say, hey, you never show your losses. That's not true. And here you go. All right. Let's look at this, good people. I'm going to just post his name. He left it there. I absolutely love the response to this. Look at this. Look what it says. I blew my complete account up today. I keep doing it over and over. It's probably the worst emotional feeling a person can have about themselves. All right. Listen to that. All right. I don't understand myself. It's not safe. And then you could see he has a reply at the bottom. Calm down. And okay, I'm going to show you exactly what he said. I absolutely love this quote. He says, calm down and give trading a rest for a while, then try once you're ready again. I did the same thing today, but I just won't let it get me down. Peace and blessings. Thank you, thank you, thank you, thank you for that. Now, let's go back to this, because this is going to help a lot of people. The part that he says, I don't understand myself, means that you will learn a good lesson and you will be a good trader. I'm going to talk to you guys and I'm going to say something that is I found to be true throughout my people I know, people that are used to going and gambling, whether to the boats or whatever, and have that addictive compulsion actually makes, and I'm not saying that this gentleman, I want to help this gentleman because he came for honest help. But if you are out there and you have a gambling, addiction type of deal where you just say, hey, I'm going to go all in and you keep blowing up your account. Listen, the response to this was dead on. So let's take an example. Let's say you're doing options, right? And let's say you're going to do 5 options for the month, right? And let's say you put $1,000 up for an option, and let's say you win 10%, right? Or let's say you put $1,000 at risk, right, on one option. Then another $1,000 at risk on another, and another, and then another. So $4,000 on 4 different trades. Let's say you won on every single trade, right? But on the 5th trade, you take all of the money you've won, plus the money you put at risk, and then you do it on your 5th trade. What happens? You blow your account up and you wipe everything out. So what I'm going to say, one of the things you need to do is, number 1, pull back, stop trading and learn, right? Make sure you take the class. And if you are taking the class and you just go to the options, and it's just an introduction to options, and you didn't take the the chapter before that, Stocks with Josh, where he does the charting in the Stock Up You class, then I suggest you stop trading everyone and go back and take that, okay? But here's one of the things that is just simple math. If you're winning 4 out of 5 times, then only put the same amount of money at risk, right? So let's say you put $1,000 at risk here, won. $1,000 on your second trade and you won. Your third trade, you won again. Your fourth trade, you won again. Only put $1,000 at risk on your fifth trade. So if you lose, and you will lose, everybody loses, then you're still winning. Let me show you an example of what I did. I want you to look at Palantir at the top. Now, this Palantir, by the time I cashed it out, it was about $300. So it was a little less than this. I just took a snapshot. I always lose money between taking a snapshot and sharing it with you guys. Well, sometimes I make money, so I'm not going to say that. All right, so Palantir, I made about $300. Actually, it was $310, all right, that I made. But what is the problem with that, Larry? The problem is, the problem is that I was up $1,300 this morning, right? So what normally happens on these trades in options is they run up in the morning, right? And so this is one of the things that I have to continue to look at my book of disciplines. And this is what I'm suggesting to you. But let me show you where I messed up at. But let me show you what I've learned from this run up in the morning, and then I'll show you what I messed up at. All right. So Tupperware, we talked about it on yesterday's video. If you did not watch yesterday's video, I told you I was looking to short. And someone said, hey, you may be early. I said, maybe. Let's see. But I do know that Tupperware was holding steady this morning. But because I went out to September 1st, it actually ran up this morning. And then what happens? In about the first half hour, I noticed this when I go out on options. And so remember, just start writing things down that you notice. So what did I do? On this one that I saw that I lost on the other one, I quickly ran over here and I cashed out with a 25% bump. Now, do I think Tupperware is going to come down greatly from where it is now? Yes. But I have established that most of the times when I go out on the expiration date, that they tend to spike up in the morning. Leave me a comment if you've noticed this, and then they cool down. Well, what's wrong with taking profits and then getting back in at a later date? Now, remember this. I brought this to you yesterday. It didn't perform so hot, but I was up 14%, cashed out with a 14% bump, which is really cool, right? But let me show you what I also did. I also got into an Apple call because I believe that Apple's going to have a something really, really good with AI. That's what I believe, all right? And I believe that the earnings will be okay. I'm not saying knocking the ball out of the park. So I entered into an Apple call, right? And then, I thought when the market was down 150 points, I thought it was cool. And it just kept coming down, 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 down. And I started dollar cost averaging down, right? And I did what you just did. I did what I teach against. Now at the bottom there, you could see that my Apple calls are down 19%. 19%. Now, there is a difference. I'm not going to blow up my account because you only go according to the money that you have. Never try to chase anyone else's. And remember, I don't want you guys to follow any of these plays without you do your own research, because these are dangerous. And make sure that you have your stop losses set to where you think they are based on where you bought it at. It's not one size fit all. So I really wanted to help you guys and stop you from blowing up your accounts. If it runs up in the morning or in the evening or in the afternoon and you're making 20, 25%, and you think that, hey, this spiked up pretty quick, what's wrong with taking profits? Don't look at what you could have. Look at what you got. Once you lock those wins in, you're okay. Now, there's one other thing that I want to talk about. I know this one's going to be a little longer as it pertains to Bitcoin, and let's see this.
So in terms of this rally we have seen in Bitcoin, what do you attribute it to, especially on a day where we've seen other folks who are invested in the asset class say soft landing is really what the rally is contingent upon?
Well, really, there's a growing consensus that Bitcoin is a unique and valuable international asset, and that's being endorsed by politicians. It's being endorsed by regulators. It's being endorsed by investors. You're hearing money managers like Larry Fink say this. And that has created a change in sentiment. You know, the odds of spot ETF being approved were 1% 6 months ago. Then they went to 50%, and this morning they were 65%, according to Bloomberg analysts. So that's really driving the near-term sentiment. But plus the fact that there's so much chaos in the crypto industry, Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity.
So the odds of a spot ETF, Bitcoin ETF rose just from 6 months ago, from 1% to 65%. And you can see what he's talking about reflected in today's Bitcoin price. Look at this. Bitcoin is up 1.53%, and so goes the rest of the popular crypto on a day, right? On a day where everything else is tanking, right? And, she suggests that it was due to a potential soft landing. So I'm heavily invested in Bitcoin at this point, and I'm just DCAing into Bitcoin. You have to do the tough things when it's tough do the tough things now to have things easier later. If anything I said in this video has been helpful to you or for you, please leave me a comment. Make sure that you watch yesterday's video. I'm going to leave it in this box, right? It's going to be a box here. But make sure you check the notification bell and join us, the Quad Squad, tonight. All right? And we'll see you later, good people. I love you guys. We'll see you then. Hey, I need my family to come join us tonight, all right? So we can learn and earn, okay? Live, love, laugh, learn, and earn. We will see you tonight.